Today I want to talk about what closing costs are and also what the difference between closing costs are and down payment. Make sure to stay till the end of the video because I have one huge advice for you that I really think you can benefit from. Hi, I'm Nadia Alrawi, and today I want to talk to you real quick about what's the difference between down payment and closing costs and what these closing costs really entail. The main difference is that the down payment is either your 5, 10, 15, 20% that you're putting towards the house. Closing costs are extra charges, and these will be shown on your lender's statement towards the end of escrow. I really hope you're aware of these closing costs before you actually get into escrow, so let's just assume you're just starting the buying process and want to get informed. These closing costs can range quite a bit and they entail quite a few items, so let's break it down a little bit. One of the closing fees you will see on your lender statement is the appraisal fee. Typically, when you do get financing, your lender will require an appraiser and it is on you, the buyer, to pay for this fee. The second one is the credit reporting fee. This is the fee the lender charges to pull your credit. The loan origination fee is the fee the lender requires to actually process your loan. Now let's talk about the loan discount fee for a second. This is the fee that the lender will charge if you're going to buy down the interest rate. Yes, you can have your lender buy down the interest rate, but it will cost you. And that brings me to a really good point because this is exactly why you should compare at least two lenders. Each lender has access to the same interest rate, but they may charge you a different fee to get you to that interest rate. So let me give you a quick example. Let's say you go to lender number one, and lender number one will quote you 6% interest rate at $5,000 loan discount fee. Now, if you go to lender number two and yay, lender number two is quoting you a 5% interest rate, at first sight, that may be the better choice. But what if lender number two charges you $10,000 to get to that 5%? That's where you should ask lender number one, who quoted you the higher interest rate, to see what it will cost you to get to that 5% interest rate. And that's how you compare apples to apples. Now here's another fee that causes quite a bit of confusion with buyers, and that's the title insurance fee. This fee is what your title company charges to search the title, examine the title, title insurance, and any document preparation fee. Wait a second, title insurance? What is that? Now I know you're gonna ask me what is title insurance, so let me give you a brief rundown on that. One of the disclosures that's required when you're in escrow is the preliminary title report. That title report will show you if there's any outstanding liens on the property, if there's any clouds on title, if there's any encroachments or any easements. So hopefully any issues with title will be on that preliminary title report. Now, let's say you close on a property and sure enough, the ex-spouse from 10 years ago proves that she or he was on title and this wasn't shown in the preliminary title report. Title insurance is there to save you from any such issues, and it will pay for legal fees and anything that's necessary to resolve the problem. Now, I know some people don't like insurance and you may not want to pay this fee, and if you're an all-cash buyer, you have absolutely the right to not pay it. I do advise against it though, because I have seen issues like this, and this also may affect any future sales of the property. Now let's move on to the next charge, which is the prepaid interest. Prepaid interest is what you need to pay ahead of time for the days that you will be owning the home until your first mortgage payment is due. Now, another big item on the closing costs is the escrow account. These fees, just be aware, they're not costs that will just go out the window. These are typically prepaid items such as property tax and homeowner's insurance. The last thing I have on my list are the recording fees and the transfer taxes. The transfer taxes are the taxes that are due when ownership is transferred, and the recording fees are the fees that are due to record the new owner to the county or city or wherever it gets recorded. Now, I know I gave you quite a long list of fees, and some of these may or may not apply to you, and you may have extra closing costs. The main point is take these fees into consideration because they are not cheap. They could go from $15,000 to $20,000, and you need to make sure that you have those funds available. Now, here's the best suggestion I can give you is to go to the seller and ask the seller to pay for all these fees. How would you feel if the seller has to pay to buy down your interest rate? My biggest advice to you is to go find a home that's been sitting on the market for a while so that you have a little bit of leverage to ask for these fees. I hope this was helpful, and thanks for watching.